let's begin. So before we start, allow me to read out the risk disclaimer for today's session. The information provided in this webinar is for educational purpose only and should not be considered as financial advice. The content presented in this webinar is based on information believed to be reliable, but not guaranteed is made as its accuracy or completeness. Phil Prem and I shall not be held liable for any losses, damages, or expenses incurred as a result of the use of the information provided. Trading and investing in the financial markets involve a high level of risk, and it is possible to lose all of your invested capital. Before making any investment decision, it is important to carefully consider your financial situation, investment objective, and risk tolerance. All trading and investment decisions are solely your responsibility. Right, this is the disclaimer. All right, so let's start. Yeah, you can see on the screen here, today we talk on the technical analysis. So this is the list of content. So yeah, today I'll be just focused on discuss what is liquidity and why it is important, and you and I should understand more about liquidity, and also finally, how can we take advantage after we know what is liquidity? Okay, maybe we can get out, try to create some strategies in the time to come. Okay, after you digest today's sessions, hopefully it helps you, right? So before I start, maybe I'll just want to check my audience here. Any of you is a breakout strategy lover? You always try to enter your position when you spot a breakout, either up or down. Any of you guys here? No? Right. So to be honest to you, I was this kind of a person, a trader. Because it is like very easy to see, right? Like when this price movement, this price action is sideways, and I see a breakout, I know on the spot I can able to tell whether or not now is in an uptrend or downtrend. Okay, because it's like a very layman trading idea. Okay, when I was like with very little experience, so this is kind of like a very novice strategy. Okay, I don't need to do very extensive research. I don't need to know like the moving averages line. I don't need to know MACD RSI. I don't need to know these candlestick patterns. I will just spot it and then I will just go in. But then the result wasn't that good. Of course, if you talk about like a very short periods of time, when you trade like a scalper, then it could be fine. But if you, because I become more greedy and more greedy, and it turned out I'll say I'm making more losses than I'm making more profits from from this kind of strategy. So after one day I come across like what is liquidity. I have a deeper thoughts, and I found out this is quite useful. It is it has been bothering me, and then I found out what's the reason behind why I was been like keep making losses rather than making profit of it, right? So yeah, if you guys know liquidity basically means there is like a buyer and seller. So when you want, if all of people here want to buy, let's say for example Bitcoin, right? Everyone is just want to buy Bitcoin, but then there's no seller. Okay, means that the liquidity is not high. Okay, it's not effective, it's not efficient in the markets. Right, so there's no transaction is able to be made because we only have like a lot of buyer, there's no seller. So liquidity means that where the order or the transaction can be fulfilled. Okay, there's a equal amount of buyer or equal amount of seller together, and the price meets and the transaction hit, then we got the price. Okay, so yeah, high. So when you can see there's like a high liquidity means no transaction can be happens with a very tight spread. The price movement is quite smooth. All right, where when you see there's like a low liquidity. Okay, any of you here know sometimes we spot a very long solid candlestick. Okay, regardless of what time frame you're looking at. Of course, the longer time frame, it will tell you more. Okay, like when you look at H4, even when you look at H1, okay, when you see a very huge long candlestick, okay, solid one, no wick, okay, no tail, okay, it just means that the liquidity is just not there. Okay, the market is not being efficient enough. Okay, this is no liquidity. But when there's a high liquidity, is most of the time we refer it to like a sideway or like a ranging. Okay, a lot of transaction has been made. Also, of course, at the same time, you also have to refer to the trading volume. So the trading volume has to be quite high. Okay, means a lot of transaction has happened in this particular type price levels. It means the liquidity is there. So where is the liquidity and why we should know? When everyone here, I know I'm for sure everyone here, when you do like forex trading, okay, regardless you're trading gold, pairing, or any other thing, you often will use technical analysis, right? You will look at the candlestick patterns or any other forms of price line, right? And what will you do? Like will you not draw some lines? Like, tell you where is the resistance, where is the support, so where you should enter, and also when you do your risk management, where is your take profit point, and then where is your stop loss level. I hope that you guys doing that, right? But how you do that is the key. Okay, we know that of course we are doing like a CFD trading, so our transaction will not actually have an impact in the real life price. Okay, so like when we buy, let's say BTC through CFD, so we are actually buying the contract, so we are not really affecting the BTC prices itself unless we really key in order to buy the real BTC or sell the real BTC, of course. But then in the markets, there are people like this. So when we got the price quote, right, it's actually people are buying, selling US dollar, buying, selling pound sterling. That is why the price is moving. So what we try to do is when we want to find out where are actually people buying, where are actually people selling, so we can spot all this liquidity, and then we can set our stop loss and take profit point more effectively. Okay, to not protect us, protect our position, protect our capital, and we try to make money out of it. So liquidity basically is, you can refer to the support and resistance level. Okay, if you are drawing the support and resistance nicely, and of course if it's like how to say, it's the market consensus. Like most of the trader will refer it as a support line, most of the trader in the market will refer it as a resistance line. There is where a lot of transaction can be made, a lot of order can be filled at this particular levels, and that is where liquidity is, right? So why it is important to understand the liquidity? So this is because we know 80% or even like 85% of the transaction out there is made by institution. Okay, it's not made by retailer. You and I, we just like a small potato. Like how many thousand, how many millions of dollar we can buy and sell one day. But institutional players, big name like JP Morgan, like Goldman Sachs, any other big bank, IBs, you can name it. Those are the big players. So they are talking about billions, or sometimes even trillions worth of transaction have been made. So we are actually tracking them. Okay, we have to know our opponents, right? So because sometimes we need to play along with them, only we can make profit. So we have to spot where is the liquidity zone and where is the liquidity void. Okay, it is very important. Okay, why? Is when you are an institutional player, when you want to have your order to fulfill, you need to look for the orders, right? And also when you open the chart, you and I are the same, okay? And the institutional player also are the same. they also refer to the same line, same resistance level, same support level. So when he needs buyers, he will go for maybe like the support. Okay, support level is where people buy in, right? So when he want to sell thing, he will go to the support line, sell all the stuff to you, sell all his asset to you at the support levels, and then he can get this kind of liquidity. Or when he want to buy and he know where is your resistance level, where you're gonna sell, right? So he will purposely hits all this resistance level and then got his own buy orders fulfilled. Okay, and then this is how those institutional players gets their order done. So liquidity zone, right? And what is liquidity void? Liquidity void is those that is inefficient. That is like we only have like either a lot of buyers, no seller, or where we see a lot of seller, no buyers. So then the price range is very huge because a lot of order is not fulfilled. So these two particular zone is very important when we trade. Okay, we have to spot it. Okay, and then after that, we refer to those liquidity zone and liquidity void. Of course, and after that, we can sort of derive some trading ideas from this idea, and we try to avoid. What we do is we try to avoid to being washed away by the market maker. Okay, we don't want to be in control or being even toyed by them. Okay, we want to play along with them. All right. So this is what we believe that probably somehow, sometime we able to benefit from it. Okay, this is what I always do last time, and I always fail, which is I always encounter a false breakout. Remember, I always say like in the past, I always like to refer to like when one asset prices is sideways, right? And then when either let's say for example it break above. So I would think that this the price movement of this particular asset is very bullish now. I will open a long position and hopefully this I guess it correctly, and then they will be very very bullish, and I can make money from it, I can make profit from it. But often it will be like a false breakout. Why? Any of you like able to answer like why always this happen? I'm sure like when you like trading, definitely you will encounter this kind of things. Okay, when there's like a sideways range or even like a downtrend range, like there's like a channel or uptrend channels, and when it's like ranging and somehow it will just break one direction. And you might think of, oh yeah, this is like a no trend reversal signal. I should not take action now. I should place my order, right? And then after that, when your order is triggered, and then it go the other round, go the other direction, and often hit your stop loss, and you losing out, right? So false breakout is actually what we call liquidity grab for those institutional players. Because remember, I told you guys, when you see this support line, when you see this resistance line, your opponent, the market maker, also referring to these lines. Okay, so when they want to have their order fulfilled, they will purposely push the price to those price level, hits all these support and resistance level, hit all these stop loss and TP levels, either side, so that their orders can be fulfilled and they can grab all this liquidity because they wanted it. They want the bullet. Okay, they want to make money as well, right? So often you are fooled by them. Okay, sorry I have to say like this. You are fooled by them, and after they grab all this liquidity, they will then go to the direction they wanted to. Okay, you might reflect yourself when you think back whether what am I saying here is true, whether or not you being you also have this kind of trouble before. Okay, often we were being fooled by all these false breakout. But sometimes, yeah, maybe we got it correct, just very strong. For example, yeah, like the recent BTC, right? It has been like quite sideways for some while, and then after that it break or these very long-term downtrend channels and it didn't come back. Sometimes we got it right, okay, but then what if we got it wrong? Okay, what we should do next? So this is the ideas I try to bring up, for you guys to think twice. So next time when you encounter this kind of situation, you might be able to, recall what you know today, what am I sharing today, and then you can react from it. Okay, it's very similar. So this is the example of a false breakout patterns. Okay, regardless it is the resistance or regardless it is the key support. So often, right, when there's like a resistance, and then if let's say you are open a short position, right, you want to open a short position, and this is a resistance, this is your stop loss, right? And yeah, the price will just like purposely, you can see that's like purposely hit your stop loss levels, and then with this long tail, and then you will be very angry, right? Because after that, after it hits your stop loss, the correct trend come, it continue to go down, right? So and then you will be like a bit like pissed off, right? So the same, like maybe you are opening a long position here. Here is your stop loss level, and it just somehow this tail is very long. This lower tails is very long and hit your stop loss levels. After that, it rebounds and continue this uptrend, and you're supposed to make a lot of profit from it, but it's just because of this, and then you make losses. I think some of you have been like a bit more experienced, then you will give like some buffer. You set your stop loss level like a bit further away from this exact or acute resistance line or support line, right? But then sometimes we will just hit because the tail is like too long and it still hits you. So we want to know like why always this happens, right? Right, next. This is what we call this liquidity grab or liquidity sweep. Okay, because like I explained earlier, because we are trading alongside with the institutional players. So sometimes this happens like when there's a sideway. Remember, this is what I like to do in the past. Okay, when I see like a ranging, oops, oh, there's already pick a direction, so I must enter here. I must enter a long position here. Hopefully the prices keep going up, right? Very bullish now. But then this somehow will be a sweep and just go down all the way and then hit my stop loss and continue to go lower and lower. All right, then this is a miss out. I was like, wow, what's happening? Why am I keep always getting into this kind of trap? And yeah, right? So what am I telling you is it's not 100% this kind of thing happens every time in the market. Okay, and one very key condition for you guys to use this kind of strategy is make sure you use a longer time frame. Okay, you don't use like a minute or 5 minute, 15 minutes time frame, and you see this will happen very, very often. Okay, so make sure you are using like daily time frame or page 4 time frame. Okay, then you spot some channel, some range. Okay, and sometimes if you being fooled by this kind of thing happen, liquidity grab, right? And maybe you can act differently. Okay, maybe you can counter back. Okay, so what we do, maybe next time we face this kind of situation, okay, and you see like a pullback instantly, this tail very long, remember? This kind of tail, very long over here, and then suddenly pull back very fast and go back to your previous like line, right? And then it go opposite direction, hits another liquidity over here, for example, right? But maybe there's like a line over here. Okay, imagine there's like a support line over here and it's go beyond this line. And then you should know, sometimes we can tell, oh, we just encounter a liquidity grab. We just encounter a liquidity sweep. So if we want to play along with the market maker, because this is how we can make profit, then we can enter quickly, we can enter another opposite direction and hopefully the trend will continue. Okay. So this is how we do it, right? And also sometimes it's easy to spot it after like the sweep, and there's like a mitigation. Remember, like a liquidity void. the order is very, very fast. The price movement after it take all the liquidity here is always move very fast. Okay, a very long candlestick over here. Then yeah, it is more like a confirmations that you are being swept by, or you just spot the institutional player are grabbing liquidity, are filling up their orders. Okay, so yeah. So I believe all these audience here, you guys get the the idea of to identify the current trend, right? Like higher high, you're able to spot what is higher high, you know what is lower low. Okay, higher high is mean uptrend, lower low is mean downtrend, right? So and then you have to have the ability to identify the potential liquidity zone. So remember, like I say, what is liquidity zone? Liquidity zone is being those support and resistance levels that often people will queue there. Okay, and like where most of the people gonna do set their stop loss and resistance or profit taking level. So these are the potential liquidity zones. So before you try to take benefit from liquidity trading, you should understand or you should really know where is the potential liquidity zone for most of the traders in the markets. Okay, and also thirdly, you can double check the momentum by using indicators like the RSI, like the MACD. Okay, you should know like the deadly cross, like the golden cross. Okay, you should know to how to use the RSI, okay, the overbought, the oversold, this kind of thing. So adding up these three, okay, spot the trend, know the liquidity zone, know the momentum, just to check the trend is correct, and then sometime when you hit by the liquidity sweep, okay, you shall be able to react. So these are the potential patterns of know the general idea to share with you guys, like when this trend like turn bullish or when this trend turn bearish. So this is like a zone that like I mentioned early, like sometimes we got being fooled by here and then we enter like a short position over here, then suddenly there's like a very quick U-turn, and often here will be like a liquidity void. Can remember the liquidity void where the market is being inefficient, okay, where we only have one-sided of order, okay, either buyer or seller, okay, seller here, buyer here, and it's very imbalance. Okay, this is the very imbalanced price patterns, and then we can confirm we encounter this liquidity gain by the institutional player, and then we can react accordingly. Okay, so and remember, yeah, time frame is quite important here because if you using like a 5 minute, 10 minute time frame, it's very easily for you to spot some sideways trend, okay, some ranging trend, okay, but which is not really what we want, okay, it's not really something that can reflect of what is the true ranging is. So better make sure you at least have to use H1, H4. H4 would be the best, I would say, if you are a swing trader, if you are even a day trader. If you want to, I would say this kind of trading strategy is more suitable for people who hold position for a longer period of time. At least you have to be a day trader, and you can refer to this kind of strategy. You can spot what is the liquidity. But if you're like a swing trader, then that is fine. That's if we have to discuss for another trading strategies for you guys. Okay, and also when we talk about sideway, right? It's not always the sideway have to be hold on. It has to be not just like this. Okay. Sometimes sideway, no ranging, we can refer to like this. And then the trend just move within here, right? And then suddenly it break. Okay, let me. Okay, sometimes it just break like this, but then after that it will go back. So this is also a liquidity sweep over here. Okay, vice versa is the same. Okay, if we got uptrend like this, okay, and then we got the ranging over here. Sometimes you got hit like this, and then you think the market is very bullish. Maybe you want to add another position, and then you very quickly go down, okay, and then you break this middle line, go all the way down here. Then maybe here is where we can react further. Okay, maybe we know that we are being fooled by the institutional trader, and then maybe we can sort of what we call revenge, and then we can enter another trade over here. All right, and then hopefully we can make profit if it's just dropping like this. Okay. Right. Yeah, so this is just to share with you guys the idea that not like sideways is always like this. Okay, sideways is not always just like this. And then yeah, you just trading like this and then hit, go down. Okay. And I want to share with you another not like a second chance. Okay. So what is this? It means that you know, like the candlestick, right? Candlestick is like this. Know when, for example, sideways, okay, and then when ranging, and then got hit, come down. So when we come down over here, right, we have to spot those candlestick pattern is very solid, like no tail or limited tail. So this what we call a liquidity void, okay? And then maybe have another second candlestick like this, right? So often when the market is very inefficient over here, right? By logic, most of the time, the price movement will go back. Okay, it might go back and retest over here. So when you see this kind of pattern, okay, ranging, and then we spot a liquidity sweep over here, and then go down, and then we see the void. Okay, this is what we call void. And when after that, when the price movement go back up, fill all this unfilled order, okay? Here, and then it's not able to make another high. Okay, it's not reaching this previous high level. Here is also another chance for us to enter a trade. Because often after a very long candlestick pattern, okay, most of the time, because the market have to fill out all this imbalance. Okay, this is what we call the market efficiency. Okay, they have to refill all this order and continue the trend. Okay, so what we do is we want to benefit from this next trend. Okay, so you got the third time when you see sideways, when you see liquidity sweep, and then when you see a sharp drop, when the market is very imbalanced, the price is very imbalanced, and when you see the price go back to fill up all this gap, okay, and then continue to go, here is maybe the place where we can enter another trade over here. Okay, in this case, we can enter another short position. Hopefully, we can make out of it, right? So this is the idea that sometimes we are being fooled by these breakout strategies like the false breakout, and yeah, we just lose easily, right? So these are some of the things that I can share with you. Also, when you do enough back tests, you should know. For example, let me go back. So for example, right, this is the real life chart, right? So when maybe like most of the trader will know this is the resistance, right? Maybe this is the resistance. So how far we should set our stop loss level? Let's say if we are shorting, okay, when we are like trading a very short, a very long period of time, okay, we're doing a short over here. So how far we're going to set away from the resistance level is the art. You should learn by time, by experience. Sometimes too far, we are losing more than we expected. But sometimes too short, we are just being fooled, being washed away. Okay, this will be like this kind of liquidity play that I said earlier. Okay, sometimes we just wash away and then the trend continue. If let's say we short it somewhere around here, and then sometimes if we hit the stop loss level here, we will be very regret that we didn't catch the downtrend like this. Okay, this is the real life example that I can share with you. Okay, right, we'll go back to the slide. So market updates. Maybe I should do the calendar first. Okay, what you should do. What you should be watch out for the coming weeks. Okay. Um. Oh, another thing that I want to share with you guys also, of course, I would say most of the trader, like 90%, 99% of the trader out there will just use technical analysis to analyze the trend and how we enter trade, open position, set our TP and stop loss and whatnot. But I would say the fundamental event, okay, the fundamental analysis will have to be on top of the technical analysis. Because, for example, like non-farm payroll, everyone know non-farm payroll, right? No matter how strong the dollar is, if the non-farm payroll come very, very weak and then suggest that the Fed's going to cut another big size interest rate, I will almost can guarantee to tell you that the dollar will drop instantly, followed by a very, very weak NFP, for example. Okay, no matter how thorough technical analysis that you draw when you do an analysis, and then RSI, MACD and whatnot, it just show dollar is very bullish. Okay, for example. But then yeah, sometimes some things happens, then it will just go another way. For example, another example is like maybe gold. Okay, gold maybe just like sideways, lacking of momentum, right? And touch wood, if there's like a war outbreak, a serious war outbreak, okay, for example, between China and US, you can be my guess that the gold might just shoot up because geopolitical will push gold like safe haven to like skyrocketed. Okay, this so sometimes we say we always use technical analysis, right, to do our trade, but then we have to know the fundamental as well. So without further ado, so I'll just share with you tomorrow we'll have the Eurozone CPI and as well as the interest rate decision. Okay, so if you guys has been trading, you can tell recently the euro has been one of the weakest currency in the markets, okay, amongst the major pairing. Okay, you can see, let's say, yeah, has been like dropping for like since the beginning of October, has been dropping. Okay, the story behind this is because after we know the unemployment rate, I think have been above 6%. Okay, and then we see the economic growth, we see the PMI of Eurozone. It's not really good. Okay, it's like very lackluster. Okay, very soft. So the market is expecting the ECB, European Central Bank, to cut further the interest rate. So when we know when the interest rate is low, it will leads to a softer currency. Okay, in this case, the euro. So this is the story behind, and we should keep an eye on it tomorrow. Okay, along with the CPI. Okay, the CPI has been at below 2% for quite some times already, few months. Okay, this is why the market also very strongly believe that the ECB might just cut further the interest rate. Okay, so keep an eye if you are shorting it. Okay, just have to watch out the exact interest rate decisions that they are making. Okay. Next is the initial jobless claim. Okay, we know that there are few things or few factors that has been supporting the dollar. Okay, the dollar has like now, for if you refer it to the dollar index, it has been at above 103 for a couple of sessions already. Okay, one thing is we have this Middle East geopolitical tension, and also now the South China Sea tension. So we know when there's in the time of uncertainty, dollar will be like a safe haven currency to hold in hand. So when during this kind of period, the demand for dollar is quite high. Okay, another thing is now people are by referring to the recent job data, they see the chance, the likelihood for the Federal Reserve to cut the interest rate by a bigger size is less likely. So on the flip side, it just shows that the Federal Reserve is being more hawkish than what the market expected. Okay, this is just two factors that has been supporting the dollar. So how can we confirm up next? Okay, in November, the Federal Reserve will have a smaller rate cut, we can refer to the initial jobless claim as well, which is also will be announced tomorrow, okay, around this time. All right. And after that, if you guys have been trading pound sterling, you already know what happened just now, okay, when in the London session, okay, the UK CPI has been come up to be the lowest level since 2021. Okay, and if you remember what the BOE governor, Mr. Bailey, he says that if the inflation data suggests that the inflationary pressure in UK is softening, this is where the time they were decided to have their first ever rate cut. So if you guys are trading the GBP USD pairing, if you're trading with the GBP JPY pairing, and if you catch the correct trend, congratulations. All right. So we know that recently has been quite soft. Okay, the recent trend is quite weak. And by Friday, we'll have another economic indicator from UK, which is the retail sales. Hopefully, maybe it will just, but I would say it will just leads the pound sterling to continue its bearish trend because the market now is expecting even a softer contracting retail sales growth. Okay, so if this is in line with the market expectation, so you can expect the pound sterling to become weaker against its peers. Okay, so these are the very important economic event or economic indicator we should watch out for the weeks to come. Right. And some market updates will be some ideas. Okay, remember I talked about Middle East tension, and then now Korea, North Korea and South Korea, they are having a sort of like crossfire a little bit, and also the South China Sea is uneased now. So maybe you have a round or another round of like geopolitical risk. This is why if you look at the gold, especially from today, finally it broke above 2670 because previously it has been served as a very, very strong resistance level for the gold, but it just broken above and then stay above, suggests that gold has been quite strong. Okay, another thing will be BTC. Okay, two things. Okay, BTC also for BTC is like the goal in the crypto markets. So sometime during the time of uncertainty, BTC will react as well positively. And another factor will be the US election is around the corner. Okay, US election is around the corner. Then often when you refer back to the previous data track record, every time after the US election, the BTC prices tend to surge, okay, jump up high. Okay, this has been recorded down. Okay, you can check back. Okay, you can Google it. So yeah, BTC is also one of the trading ideas that you can watch out. Okay, another thing that maybe you should watch out will be the Chinese equities market. We have the China A50. We have the Hong Kong Hang Seng Index. Say some with us with Pure Prime, the symbol will be HK50. Okay, and some other place will be like HSI or HK Index. Okay, because tomorrow the minister of China they will announce another round of economic stimulus package. Hopefully it will trigger a rebound for the equities market, so you guys can watch out. Maybe there's a trading opportunity, right, for the HSI and also for the China Air 50. Yeah, so these are the some of the market updates I can bring to you, and adding with the liquidity trade strategy that I shared today, hopefully is able to help you to make more profits in the time to come. Okay, so yeah, so here's the end of my sharing today. Thank you for your time. So I'll just open up for some Q&A. Hopefully I can answer you. Mustaqim asks, like, how many times will the support resistance bounce be broken? So I actually cannot answer you. That is because it depends on the situation, and also it depends on the market makers whether or not they are collecting enough. Okay, if the order is not being fulfilled, maybe they will hit another time. But if there's like tons of orders there for them to hit, for them to grab all this liquidity, maybe just one shot, and you will just bounce and then done. Okay. Hopefully, I already answer your question. For Andy Maldiadi, I have participated in webinar 5 times, but I've never gotten the voucher. Okay, so I just explain to you guys the mechanism. So for the webinar trade loss voucher, right? It's like at the end of this session, okay, my colleague, okay, not me, my colleague will just random pick the participants, okay, just draw name because I don't know you, and then like my colleagues also they don't know you, so they will just random pick some lucky participants, and then the email will send to you guys. I think every participants will get the email to tell who is getting this voucher. Okay. I think every time we release the voucher accordingly. Okay. So hopefully, okay, I wish you got it this time, Andy. Right. For gold, when do you think the future support and resistance will be, and consider that there's a current bullish trend? Okay. Right. For finally, it has broken the previous like support levels over here, and it's like inch away, okay, from the all-time high, right? So when you look at the daily time frame, you can tell now currently the gold is trading in a very very bullish momentum. Okay, so how can we know the next trend, because there's like no more price that we can refer? Maybe we can use this Fibonacci retracement level to see where is the next resistance. So if you look at the 61.8% of the Fibonacci retracement, the next resistance where we can look at is near to 2708. Okay. So if you are holding a long position here, might be you might be prepared to encounter some resistance or some profit taking sentiments. Okay, but of course, touch wood, if there's things happens out there, no war outbreak, maybe it will just shoot to another resistance levels over here. Okay, so you might also ask, where is the support levels if you are like a trend trader? Okay, so maybe we can refer also to the downtrend, okay, retracement level. Okay, maybe we can also refer the level here. Okay, this one will make you feel. So here is also another no 61.8 level. Okay, so I know the range is quite far away. Okay, especially when you look at refer to the daily time frame. But yeah, I would say now the for once in a lifetime, we finally got a very trendy gold movement. So perhaps if you already holding the position, and then your resistance, your risk tolerance is quite high. Yeah, this might be the support levels, or even like 2650. Okay, if you want, 2650 will be the psychological support level for the gold. Okay, so hopefully you can make profit from the gold for Dani. Right. Any other questions? So thank you, Jason. Thank you, Habil. Also really thankful for you guys is able to spend some time with me, and I was able to share the knowledge with you. And yeah, it's like both sides. Sometimes I will learn from you guys as well. Okay. And yeah, I will just share my training experience with you guys. I'm really happy to do that. Yeah, any I'm expecting any further question. Anonymous attendee. So please can you recap on the difference between fake out and liquidity grip? there's no difference, I would say, because some just the difference will be just the name. Okay, when you are a breakout strategy enthusiast, okay, when you use this kind of strategies, then when you see there's like a liquidity grab, you will call it as a fake out. Okay, because it just pump and dump. Okay, but then for like SMC concept, trading concept, or the ICT strategies, we will see it as a liquidity grab. We know what is happening now in the market when there's a fake out, when there's like a false breakout. Right, so there's no different, just different name, and when we see things differently. So like if you adopt a different strategy, we'll just call it a different name, right? So, yep, if there's no more questions, so I guess this will come to an end of our session. So, very thankful for you guys being here with me, right? I really appreciate. So, yeah, if you have any interested topic, you can send email to your respective account manager, right? Or maybe you can drop us comments on our social media. Okay, can come to our Telegram, you can come to our IGs and whatnot. Let us know. Maybe you can prepare for it with you, and hopefully just to assist you to trade better in the future. All right, thank you guys. See you guys in the next webinar. Thank you. Bye bye.